This was the 54th annual shareholder meeting for Berkshire Hathaway. And while shareholder meetings are known for being lightly attended, staid, and downright boring, this was anything but. More than 40,000 people attended here, including business leaders like Activision Blizzard CEO Bobby Kotick, Quicken Loans founder Dan Gilbert, and Spanx founder Sarah Blakely. And for the first time, Apple CEO Tim Cook was in attendance. Apple is now Berkshire's largest equity holding, and Berkshire is Apple's third largest shareholder. We caught up with Cook this weekend and asked him what he thought about it all.
I think it's incredible. I've never been to an annual meeting like this before. You know, I thought ours was lively, but there's 40,000+ people here. And I love the fact that Warren and Charlie take every question, and of course, through all of it, not just the wisdom that they exude, but you can feel the integrity and the humility coming out. And I think it's a great learning experience for me and for everybody in the audience, I'm sure.
Joining us now is Berkshire's chairman and CEO, Warren Buffett. And Warren, what's it mean to you to have gone through this weekend?
It's a lot of fun. Yeah. I mean, you see who you're working for, and they see you, and you interact with them, and they come in sort of a Mardi Gras spirit. I would say in the last 10 years, was now maybe 40, well, from out of town, not 40,000, but a great many from around the world. I just never get a letter of complaint. I mean, I know that somebody misses planes or has a car rental that isn't available or a hotel room, but they just come in the spirit of enjoying it, and the people in Omaha welcome them that way. So people go around with smiles on their faces. I mean, we have 600 of our own people that come in from our various subsidiaries, and they really work for a couple of days, and I've never seen anything but smiles on their faces.
Well, unfortunately, we're not going to allow you to rest on your laurels this week because we have some major news that's breaking this morning. You see the markets already down by almost 500 points, the futures here for the Dow. What do you think about the potential for trade tariffs coming back on and what that might mean for the trade talks?
Well, I can't gauge how both sides will play the game, and they're always, some people negotiate different ways, if we actually have a trade war, it will be bad for the whole world, and could be very bad depending on the extent of the war. But there's times in negotiations when you talk tough. The one thing you can't do, though, is you can't shake your fist first and then shake your finger later on. I mean, that is not a technique that works well. So when you do push ahead, you don't know exactly what the outcome's going to be.
Well, you can't shake your fist first and then shake which finger later? What are you talking about?
Well, you're more advanced on this than I am, actually. But that's what you're worried about, is you get the other finger back, and you have to mean it after a while. Otherwise, it doesn't mean anything, obviously, when you do that. And you're gauging a response from someone else that also has their own calculus and has their own internal political considerations and so on. So it's a dangerous game. Doesn't mean it's a game that shouldn't be engaged in, but it's a dangerous game.
You negotiate a lot of deals too. Would this be your tactic?
Well, it isn't mine at all. But you know, we can talk about the Occidental deal later on, the illustrator. But I've had a consistent way of negotiating, and that has its advantages. Probably has its disadvantages too. But I just say what I'll do, and I don't do anything else. So people really know that's what I mean, and they can decide whether what I've said is acceptable or not. But they know that I don't go through a game. Now, there's lots of people in acquisitions that really like to play games, and they're used to it in their own business, and it's their way of doing it, and that's fine, but it doesn't work with me. And I don't want to, I can't afford to spend the time on it. I mean, you know, you don't know whether you're ever going to get there, and you spend weeks and months, and it's just, it would be a huge time waster if we did it.
You know, I don't know that this is bluster coming from President Trump, though. He's already put the tariffs on. And I don't know that I would take this lightly and think that we're not going to be seeing 25% tariffs on Friday.
You can't, but if you're playing the game, you have to solve that way. I mean, if with some people in negotiations, the best technique is to act half crazy. I mean, with your kids, you can see how it works. You're negotiating things with your children all the time. I'm going to count to 3, and if you don't do this and that, they know you're not going to shoot them in the end. So they've really got the edge, and that goes on all the time. And it's interesting, kind of, with the reputation of the industry. We bought a very large auto dealership operation a few years ago, and we did make more or less our kind of deal. We named the price, and probably 20 times since then, people come out and they say we want to do something, and they just we've never found one that we could do the same way. I mean, it's just part of their lives to negotiate, and it's part of my life not to negotiate. So
you mean to come in with a high offer and expect that you're going to negotiate?
Yeah, anything you say, and I understand that. I mean, that's the way a lot of things take place. But probably a majority of transactions, but it's nice to have a reputation for not doing it because it makes it a lot easier. You save a lot of time.
Well, let's talk about what it would mean if tariffs on Chinese goods rose to 25% from 10% on that $200 billion worth of goods at the end of the week. How significant is that? What would it mean for Berkshire's businesses?
Well, it would mean a lot to the world. It isn't just the countries involved, because they take the dollars they receive from us net and they buy goods in other places. I mean, their trade surplus is considerably less overall than their trade surplus with us. So everything intersects in the world, and it depends who gets retaliatory with us or with them, and it's easier to start it than it is to stop it, and the effects would be huge if conducted on a major scale over time. Just imagine, Becky, that our Constitution was set up differently, and that states could erect tariffs, and Michigan would put a tariff in on cars, and we would have one on corn, and that. The degree to which trade would contract in this country, the mislocated plants, the migration of workers. I mean, it would be, well, it sounds ridiculous to talk about it because it is ridiculous. But you've got countries where you would have similar effects if you get country after country after country, because you can't just have it between two countries. It will spread. Now, the very fact that it's sort of a nuclear threat is what brings people to the table. So I mean, that's the way that many play the game. But you don't want to have too many nuclear threats out there, because someday somebody may feel they have to fulfill one.
Right. Obviously, that's why the global markets are under pressure.
Sure.
It's not just Chinese markets that are down. You saw that Korea, Kospi was down by about 3%. Markets down just about everywhere at this point.
It affects everything.
So that's you're saying the market's reaction is the right one. It's not an overreaction.
It's rational, and then we'll see what happens next. But obviously, if you went to bed a week ago and you thought there was a 1% chance of a trade war, and then subsequent events makes you think there's a 10% chance, markets reflect that very quickly.
What would you put in terms of, I mean, you're an actuarial mind in terms of these things. What kind of odds would you put on it?
When you talk about two leaders of the two major economic powers in the world, that's not the sort of thing I can lay odds on. I mean, you were talking about two personalities who are very much used to getting their way in politics, and you're talking about how they will be perceived in their own country in terms of their behavior, and it gets very complicated. There's no way I know how to predict that.
Although you've written insurance contracts on weirder things than this,
Yeah.
what would it take for you to ensure that there was a deal done at the end of this?
It would take a big premium. Yeah, this would not be the kind of thing I would look to insure, frankly.
Because it's so unknowable?
Yeah, and you'd have a hard time finding the risk precisely, because if they lasted for a month, and then so you get into the duration of how long it was, you'd have a lot of trouble writing the contract. But it is the sort of thing, not precisely identical, but it's that we do take on unusual risks. But this is a big one.
What will it mean for Berkshire businesses specifically? And I just think on Friday we spoke with Jim Weber, who's the head of Brooks Running. They've already relocated and moved a lot of their operations to Vietnam because of this concern. They've been in the process of doing that since these trade talks first kind of appeared.
Well, we've seen it in our rail cargo, intermodal, the stuff that arrives on the West Coast. I mean, everybody stocks up ahead of time, and it distorts things just thinking about it. You can imagine the distortion if you get into it. And you really can't predict the speed or the degree of effect because it spreads. You can't do something between the U.S. and China in a big way without it affecting all the major markets as they go around. And you're starting a game that you don't know the ending of, but you know it isn't a good game. But like you say, it may be necessary to play another game to avoid that sort of thing. I mean, that's what mutually assured destruction was. I mean, you felt as long as you had mutually assured destruction, nobody would actually launch a missile. And this is can be a similar type game, a little bit of chicken in it.
You say that intermodal rail loadings were affected by it, meaning that you saw an increase in rail car loadings because months ago because people were trying to stock up.
People loaded up on inventory that they thought might. I mean, if you thought there was going to be a 25%, I mean, if I thought there was going to be a 25% tax on Coca-Cola next week, I would have my house filled with Coca-Cola. It would look very good. Sales would look terrific, and guys that transported to my house would be doing great, and everything, and boom, it'd all end.
Well, that's a big concern. I mean, if we've been looking at this great economy and thinking things are wonderful, but it was really just pulling things forward, and then you get into a situation where it stops down, does that concern you just about
economic growth? Well, it pulls things forward, and I think actually in the GDP figures there was a big inventory adjustment, no, if you think the flow of something is going to either stop or get more expensive, and you need it, you're going to load up ahead of time.
Will this change your behavior in any way when it comes to purchasing securities or making deals?
No, we will buy the same stocks today we were buying last week. It's just I won't tell you their names.
But would you buy more if you get them down 500 points?
The cheaper they get, the more I buy.
But it doesn't mean that you don't think the markets could go down further.
No, I'm not buying them because I think they're going to go up the next day or the next week.
Yeah. So it's something you're watching very closely?
Yeah. Yeah, but we watch the prices of things we do more than current events. Mm-hmm. Because in the end, we aren't buying them because what's going to happen next month or next quarter. You know, we're really buying them because we think they'll be good businesses 10 years from now. If somebody came to us with a good business today, we'd buy it. And we'd buy it regardless of what's going on in the tariff situation. We might have, this won't be the case, but we're more likely perhaps to get something when other people are fearful. And you see that in a big way instantly in a market, in the market for businesses. But it's still there with people's minds.
Welcome back, everybody. We are here and news is breaking. There's just an SEC filing that came out from Kraft Heinz. That's obviously a big Berkshire Hathaway holding. Kraft Heinz says that it will restate earnings for 2016 and 2017 due to misstatements in the original filings. It does not, however, believe that the misstatements are what they call quantitatively material to any individual reporting period. It says that the impact on adjusted earnings is expected to be less than 2% for each year. Kraft Heinz says that it has now completed an investigation that shows several employees in its procurement operation engaged in misconduct, but none of those were members members of senior management. Our guest today, again, is Warren Buffett. He's the chairman of Berkshire Hathaway, which owns a major portion of Kraft Heinz. And Warren, what do you think of this? This news just hitting while we're sitting here.
Well, that's more or less what I've heard. I'm not on the board anymore, but Greg Abel and Tracy Britt Cool are on, and so I've heard from them. This is an update that I heard last night and they can't issue the first quarter reports until the 10K is filed, and they can't file the 10K till Price Waterhouse signs off on it, and that apparently is going to require a restatement of a few years, and we could not report any earnings from Kraft Heinz in the first quarter, because if we get a dividend from Bank of America, that dividend goes into earnings. But because we have over 20% of Kraft Heinz, we don't report the dividends, we report the earnings. So we received a dividend of about $130 million in the first quarter, but that we don't report that. And we expected to get the earnings before we issued our own report, but when the time came to issue our report and we didn't have anything, we put a zero in there and explained it in our release last Saturday, and this is just a further indication of the facts as they stand now. At some point, Price Waterhouse will need to be happy with the figures they're reporting, and that evidently involves a restatement. And at that time, my guess is the quarterly figures become quite current, and that we keep picking up our share of the earnings.
I mean, this has been a long standoff period between PwC and the company. If they've missed all of the deadline to get the numbers to you at that point, what happened?
Yeah, we didn't expect it. And, I thought that we would have the earnings on time. And Kraft announced their earnings for last year, but they had not been signed off on by their auditors. So while they released them publicly, they couldn't file the 10K with the SEC subsequently. That's not unusual for companies to announce the earnings before they've actually got the sign off. But in any event, it's just, we thought we were going to get them this week or next week, whatever it might be. And then last Saturday came, and that's our time for releasing quarterly earnings. We did not have them, so we stuck nothing in there, and then had a footnote, and we put in our press release as well that we just didn't have the figures.
If they're restating their earnings, does that mean Berkshire Hathaway will also have to restate its earnings?
No, it would be so immaterial by the time you take just our share, and we're a much larger company. So I don't know exactly what we do when we get. If it gets into the second quarter, I don't know whether we pick up 2 quarters in 1 quarter or exactly how that works.
They said that this is they've wrapped up this investigation. Are you satisfied with what you've heard from that part of the investigation, or do you know the details?
I don't know about that. I do know that because I've been kept abreast of some of the things. I don't listen in on directors' calls or anything like that, but Greg tells me what's the high points of what, or the low points of what's happened. And we have a terrific head of the audit committee, Jack Pope. He's an independent director. Mm-hmm. He knows this sort of thing, and he's put in the hours on it. And so I feel very good about the fact that Jack is he's really in charge of things from the standpoint of the directors.
Does the company have your confidence?
The company has my confidence.
You had talked about it over the weekend, where you said that what you paid for Kraft was too much in hindsight.
Exactly.
Not what you paid for Heinz.
That's correct. If we just bought Heinz, it'd be a better investment. And we don't 50 odd, just over 50% of it, of a business that would be doing fine in relation to what we paid for it.
In a situation where you've determined that you've now paid too much, what do you do?
I paid too much for stocks. I paid too much for a lot of things. Time usually works it out, but it means that capital could have been better deployed in other in other areas. You can always pay too much for a business. And I've done it with stocks many times. I've done it with businesses. We've got at Berkshire, we have at least a half a dozen businesses, and I can't even use a "we" there. I got to say I pay too much. So, and if we make the next 10 deals we make, there will be a couple where it'll turn out that I paid too much.
Warren, there was other news that crossed the wires just last night in another deal that you're involved in. That would be backing up Occidental and its bid to try and take over Anadarko, which is also engaged in talks with Chevron, who's also got a bid out there. Last night, Occidental put out its own statement and said that it's going to be revising its proposal. It's now talking about a deal, still $76 a share offer, but 78% cash and 22% stock. By increasing that cash portion, it allows what they call significant immediate value, greater closing certainty, enhanced accretion, because with this, they no longer have to ask their shareholders for permission on this. What are your thoughts about where the deal stands and what this latest update says?
Yeah, I got a call yesterday after evening. First time I talked to Occidental, actually since a week ago yesterday, Sunday. And they told me that they were going in this direction, which I like, but I have nothing to do with it. I mean, we committed $10 billion, and it had nothing to do with how they framed their offer, how much they offered, or anything else. That all they knew was that they were sure they could get $10 billion from us if they complete the deal with Anadarko.
One of the pieces of the letter that Vicki Hollub, the president and CEO of Occidental, put out in its letter back to Anadarko surprised me a little bit with just how it still seems like this is a hostile bid. There's not good faith talks that seem to be taking place between them. Based on her letter, she said this: "We remain perplexed at your apparent resistance to obtaining far more value for Anadarko shareholders, which has been expressed clearly through our interactions over the last week." It sounds to me like that is still kind of a hostile bid.
Well, it's my understanding, and bear in mind, the first thing I heard about this was a week ago Friday, when Brian Moynihan called and said the people at Occidental would like to talk to you, and I talked to them on Sunday, a week ago yesterday. My understanding is Anadarko and Occidental had talked much earlier, well before the Chevron bid, and we're talking about a transaction, and then Chevron made an offer which Anadarko accepted, but Anadarko was for sale. I mean, and so it had held talks about selling itself to Occidental. This is my understanding, so they were talking. Maybe they were talking to more than two parties, for that matter. I wouldn't know that, but they decided that they were willing to sell. I'm sure subject to price, obviously, and they accepted an offer, and Occidental felt they had a better offer, and that's apparently where things still stand, but I don't know all the details.
Part of the idea behind it had been that, well, would Occidental be able to get approval from its shareholders because its stock was under pressure? Some of the shareholders obviously didn't like the deal. By using your cash instead of issuing as much stock as they had anticipated originally, that will keep them from having to go to their shareholders to ask permission for this. And as they're saying in their own letter, that certainly increases the certainty of this deal taking place and removes some of that uncertainty.
Yeah, I would also think that the shareholders, if you own Occidental, you're bullish on oil over the years, and you're probably bullish on the Permian Basin because they have such a significant portion of their assets there. So the idea that they will use less stock and more cash as part of the deal, although they're getting the cash from us, but I would think net, if I'd been a holder of Occidental over time, I probably would like that kind of a deal. At Berkshire, I hate to issue stock. So generally speaking, if any company we own is buying something, we like it better when they buy it for cash than they use stock, because we like their stock. So we'll see what the reaction is to this. But I would just imagine it had been an all-stock offer to begin with. I would think people would net their shareholders, but the shareholders will be speaking out. But I would think that the shareholders would like the shift.
Andrew's got a question from Beck in studio too. Andrew?
Sure.
Hey, Warren, I was just curious whether you were surprised that Anadarko hadn't engaged with Occidental on this at this price, and also if there was a price at which you would think that that Occidental shouldn't pay, meaning if Chevron were to come back and they're 5 times the size of Occidental, they could just write a check and this could be over with if they wanted to. But if the price were to go up, I know you get preferred shares ultimately. Is there a price at which you wouldn't look at this favorably?
Well, we've committed the $10 billion, 100%. We do not have any control, nor did we want any control over what Occidental did with our $10 billion in the terms of everything. There's nothing in our deal that provides that they have to come back to us and request permission really to do anything. It's a remarkable deal, but that's the way we do them, and in that respect, so they get our $10 billion if and when they close a deal with Anadarko, and they don't have to consult us. They certainly don't need our vote. They don't. It was a matter of courtesy. I got the call yesterday, but it was not a matter of necessity on their part. And that's one of the advantages of dealing with Berkshire. I mean, we can do things that other people don't like to do or their lawyers don't like them to do. And this is not a deal that our lawyers would have written.
Is this deal a bet on the Permian Basin and on oil prices, or is this just a bet on, hey, it's great to have an 8% preferred?
Well, not great to have an 8% preferred if there isn't any oil there. It's a bet on oil prices over the long term more than anything else. It's also a bet on the fact that the Permian Basin is what it's cracked up to be and all of that sort of thing. But oil prices will determine whether almost any oil stock is a good investment over time, whether it's Exxon or some wildcat driller. I mean, if oil goes way down, you don't solve that by hardly anything. And if it goes way up, you make a lot of money. And it's not what it does next week or next month or next year. You're buying reserves that go far out into the future. So you have to have a view on oil over time. And Charlie and I have got some views on that, not too specific because they're not that well informed, but they are. We feel good about doing the financing.
Why don't you just buy it yourself? It's only a $35 billion deal, and you've got $110 billion in cash sitting around.
Well, that might have happened if Anadarko had come to us, but we wouldn't jump into some other deal that we just heard about through somebody coming to us and seeking financing. We wouldn't. No, we hope people come to us on businesses, but I had no idea that this transaction was going to happen. I mean, a week ago Friday when I got the call from Brian Moynihan, I'd read in the paper about the deal, but I've never had any contact with Anadarko of any sort.
David Faber reported last week that you had said you would offer up to $20 billion, double the $10 billion that you did do on this deal. Is that the case?
If they needed it. But I think they have an arrangement, obviously, with the Bank of America, who called us. I don't know anything about that deal. I just know that the B of A has arranged that debt financing. If there were a different sort of thing. But what I meant to some extent with that is I'd be also very happy if somebody calls tomorrow and needs $20 billion. Occidental just needed the $10 billion.
Okay, but you like doing these deals at bigger sizes, not smaller sizes?
Exactly.
Okay. Back to Andrew's point, this is there for forever. It doesn't matter if the bids go up. Doesn't matter what happens along the way. Your $10 billion is in this deal for whatever happens.
Yeah, there is. The lawyers don't write deals like this, but we tell them to. There's no material adverse change. There's no. If the stock market closes, but this deal closes, we're there. We're there under all circumstances, and we have not written any outs into it, and but that's part of the attraction of doing business with Berkshire. And besides that, we do it all ourselves, so it isn't something that's parceled out among 10 parties, and each one comes in and has to get their permission to make changes and all that. When they came to my office at 10 o'clock on Sunday, a week ago Sunday,
yeah.
They knew that if we agreed, which we did by 11 o'clock, they knew Berkshire was 100% in. Now, they had their own board of directors meeting the following evening, but they could say to their board, you're going to get $10 billion from Berkshire when this closes, and you don't need to give a thought to it.
Obviously, many stocks are under some pressure from what they were seeing from these Chinese trade talks, what the implications are from all of that. One stock that is under pressure today, shares of Apple. If you want to take a look at the chart, closed on Friday at $211.75. This morning, the bid's at $204.91. The ask is at $205.10. And that's because China has been such a huge component for Apple. Tim Cook talked in the last earnings last week about how things seem to be really improving there. Tim Cook also traveled to Omaha this weekend. He was here for the Berkshire Hathaway annual meeting. It's his first time coming here. But for Berkshire, Apple is now the biggest investment that they have in their equity portfolio. It's also Berkshire is also the third largest investor in shares of Apple. So when we sat down with Tim Cook this weekend, I got the chance to ask him what he thought and how he found out that Berkshire was first buying into shares of Apple. Listen in.
I found out probably like you did, which is the 13F gets filed, and somebody tells me about it, and I thought, oh, this is really cool. Warren Buffett is investing in Apple. We welcome all shareholders, but we run the company for the long term. And so the fact that we've got the ultimate long-term investor in the stock is incredible because our interests are aligned. And then I knew Warren before then, but we had no idea they were looking at the company. They do all that obviously secretly and have their own method of doing that. And it's been a privilege, and I'm super happy they've been accumulating.
What happened when you found out? Was there talk around the office? Were there any high fives, or was it oh boy, now what?
It seemed like recognition in a way, like an honor. And a privilege, and I don't mean that in a light-hearted kind of way. I mean, wow, it's Warren Buffett is investing in the company, and and so it felt great. And I think for the whole company, because we knew that he didn't. He's been very clear he didn't invest in technology companies and companies he didn't understand. He's been totally clear with that. And so he obviously views Apple as a consumer company, and in a different kind of way. And I think that's really special.
Warren, what did you think hearing this? Because when I told you we were going to tell you how he found out, you said, "Oh, good, I'd like to hear the story." You've never talked to him about that?
I didn't, not about that specifically. No, I've known Tim a little over the years. I see him maybe at least once a year, and maybe twice a year. And I've talked to him on the phone a few times and sent him a letter. I sent him a Martin Luther King speech some years ago that was kind of lost to history. That was terrific, and I thought he'd enjoy. But no, I didn't call him up while we were buying. I try to keep as quiet as I can when we're buying anything.
China, though, is a huge issue for Apple. It's why the stock had been under pressure earlier this year, or at the end of last year. Last week on the earnings call, it certainly sounded like they thought China, the situation there was improving. What does this news today mean for you?
Well, the important thing is really what the relationship is with China 3 years, 5 years, 10 years, 20 years from now. This all enters in, and certainly it's hard for me to imagine that the two most important countries in the world would do dumb things over a long period of time, but they could. I mean, the possibility always exists that you get miscalculations or egos or national pride or whatever it may be, and that things do escalate. I don't think that'll happen. I know it shouldn't happen. I think it's a low probability, but that would be bad. It'd be bad for everything Berkshire owns. It isn't a question of Apple, or it have a very negative effect on our economy, other world economies, and there's a chain reaction of sorts, type of thing. So I don't think it'll happen, but I don't think it's zero, the probability.
You say it would be bad for virtually all the businesses that Berkshire owns, but Apple's in a pretty unique position because it is so front and center, because it's already come up as a potential target for some of these things. Do you think Apple runs a special risk or not?
Well, it would have, obviously in terms of our electric utility in Iowa, would have a very minor effect relative to other types of businesses. But the ripple effect, if you get a recession, and it hits everything almost eventually. So I think it's very unwise. It's kind of like if you have a nuclear war, you don't want to say ha ha ha, if you're in Canada because they're only attacking the United States or something. It's impossible to contain it if you have two superpowers in trade involved, and you can't predict exactly how it spreads.
Apple shares are down 3% this morning, just looking at the chart.
Yeah.
That's good. Why?
Well, because they're repurchasing shares, and when they repurchase shares, our interest goes up, and we don't lay out a dime. I love it, and obviously it's better to buy it at X than 2X.
They've said they'll purchase. They've reauthorized up to $75 billion in additional shares. You're behind that? You're in favor of that, I should say.
Wildly in favor of it.
We're going to talk a little bit more about share repurchases, not just with Apple, but more broadly, because it is a question that came up pretty frequently this weekend at the annual meeting, too.
Repurchases can be the dumbest thing in the world or the smartest thing in the world. And I've seen both. But they're just, repurchases by the company are just like purchases by us. They're dumb at one price and they're smart at another price. And I like it when we're invested in companies where they understand that. Many companies just repurchase, and it's the thing to do, and they're encouraged to by some shareholders and by their brokers. And repurchases can be dumb, they can be smart. At Apple, they've been smart.
Warren, we did talk at the top of the last hour about what the China tariffs potentially mean for business and what they mean for Berkshire. But you're looking at the markets down almost 500 points this morning. And for people who are just waking up and just kind of trying to figure out what this means for them, for their portfolios, for their businesses today, I'm sure they've got some questions. What can you tell them? What do you say when you look at the markets, I guess, down 460 points right now for the Dow?
Well, I'm saying, if you own a farm and you're worried about selling your farm because you read the newspaper this morning, or if you own a perfectly decent business in your town and you're worried about you think you should worry about selling your business today because then you should worry about thinking about selling stocks. But if you look at stocks as businesses that you own little pieces of, why in the world should you sell it based on headlines of any sort? If you expect a farm to be a good investment over 10 years, if you expect an apartment house to be a good investment over 10 years, and if you own a marketable security, which is an interest in a business, and you expect that business to be a good business over 10 years, it's nonsense to get feeling good or bad about what stock prices do in a day unless you have extra money and they go down, and then you feel better because you can buy more of them cheaper. Just like if you could buy the farm right next to you cheaper, you'd love that if you were a farmer.
You know, usually that's an analogy that I understand and agree with, but this time around, a farm in particular, I would be pretty worried if I was a farmer trying to figure out if I should be planting soybeans or if I think I'm going to be able to make enough money to get things back this time around.
Yeah.
Tariffs have hit the farmers particularly hard, and a lot of them have said they're behind the president. They want to see us get to a better situation, but many of them are also in a position where, look, they've already been asked to give a lot. They thought we were about to reach a deal, and they're hoping that when they're making decisions for this planting season, they have some clarity.
Well, it is true that business generally has improved, markets improved, and everything, and the farmer has not participated in that. So this has been a very good economy for a long time. I mean, we've been coming back for 8 or 9 years, and businesses kept getting better. Interest rates have been low for business. Stocks have gone up, and the farmer has not participated the same way. So maybe I shouldn't have used that example, but if you have a decent business, I mean, you buy into a business. You don't buy a stock that wiggles around, you know, and people understand that, but then they behave as if it's bad news when the price goes down. If you had a half interest in a wonderful business, and the person that owned the other half came in and they were depressed by these headlines today, and they said, I'll sell to you my share of the business a lot cheaper than yesterday because I think this whole thing is going to just end the world. You just say, here, I wish you weren't so depressed, but if you're selling it to me cheaper, you know, the business is going to be here 5 years from now and 10 years from now. And all headlines, you don't know what the world's going to look like in 3 years or 5 years or 10 years. What you do know is that the United States is going to grow over time and that businesses are going to generally do well. And if you own decent businesses, you'll make money.
That's a great long-term perspective, but for the shorter term, not just for stock prices, even for companies that are trying to think about their quarterly earnings or trying to figure out how they're going to be able to pay for some items or figuring out how the relationship with the supplier is going to work at this point. It could be an impact that's fairly
well, you have
large
to run
in the short to medium term.
Our own subsidiaries, obviously, where they thought that tariffs could be increased, they've loaded up more on inventory. I mean, no, you make business decisions, but you don't make a decision about whether to buy or sell the business if you've got a good business. You've got to, if you're going to own a business for 10 years, you're going to see a lot of terrible headlines. You know, I bought into my first business in 1942, and you know, they didn't notice that I did. But just imagine all those headlines at that time, and the world, you know, the Philippines were falling. I mean, we were losing the war, and but the United States is going, your kids are going to live better than you did, and your grandchildren are going to live better than they do. And generally speaking, productive assets are going to be worth more in this country. And if you own a diversified group of productive assets, you'll do fine as long as you don't read the papers.
Although you did say an hour ago that the sell-off when the Dow was down by about 500 points was not an undue sell-off, was not overdone at that point if we actually get into raising tariffs by 25%.
Well, it may not be undue. I mean, in the day or the week, but you shouldn't be. I don't have the faintest idea how to buy and sell stocks for a day or a week or a month. I know how to buy businesses for a long period of time. I'll be wrong on some of them. You won't be wrong on America.
In terms of that, when you look at the markets today, if you see cheaper prices, would that mean that you would buy more of a stock that you might have bought last week?
Yeah, some of them will hit levels that I might have been below. I will always react well to declining prices. If I like to buy a business, you know, if I could buy this hotel we're in and they drop the price, is that good news or bad news for me? I mean, if I like to buy hotels. So, but the fundamental point, and some people get it and some don't, but when you are buying a stock, you're not buying something that wiggles around or is on a chart or has a target price. You're buying part of a business. If you're right about the business, you don't pay a crazy price. You can be right about the stock as long as you don't do dumb things yourself.
Over the weekend, a lot of questions came up about share buybacks.
Yeah.
People were asking specifically about Berkshire. Why don't you buy back more shares of Berkshire, especially when you have $110 billion in cash on hand? What's your answer to that?
Well, we will only buy Berkshire if we think that the shareholder the next day is or that same day is wealthier after we bought the stock. In other words, we bought it for a shade less, or maybe a lot less, but at least a shade less than it's actually worth. And we don't set out to buy any given amount. We set out to buy stock at prices below intrinsic value per share. Now, intrinsic value per share is not something that is precise to the penny or anything. It's probably a band of 10% or something like that. And my partner, Charlie Munger, if you asked us to give you a slip of paper with intrinsic value per share on it, it would not be the same figure, but it'd be close. And we both would have a band or something of the sort. If you're buying it below that figure, you know, if we've each got $1 and you'll sell me, and we put it on the table and you can't reach it for a while, you say, well, I can't reach it, so I'll sell you my share for 95 cents. I'll give you 95 cents. You know, if you say $1 too, you know, so no dice. So it's not complicated. It may be beyond my ability to figure out the intrinsic value of certain kinds of businesses. But with Berkshire, I've got a reasonable idea, and I try to give the shareholders the same information that I regard as important in calculating that. Now, it can change. Presumably, you want it to change upward over time because we retain earnings and we should be building more value. But that's the equation. First of all, you have to have the cash you need to run the business. I mean, Steve Jobs called me one time. I mean, he called me, I don't know how many years ago, but he was thinking about repurchasing shares, and I said, Steve, there's just two questions. I said, you know, A, you have all the money that you need to develop the kind of business that you've got in your head for the next 5 or 10 years. And he says, we got plenty of money. And then I said, then the second question is your stock selling for less than it's worth? And he said, it's selling for a lot less than it's worth. And I said, well, you've answered your own question. But if he'd answered, we need the money we've got here actually to fully develop our business, and we've got opportunities to do it, I'd say forget about it. You know, build the new plants and do that, and maybe the cash will come in later where you can buy in stock. And secondly, if he said the stock isn't really cheap, what's the reason for buying it in?
Did he buy back shares after that?
He didn't like buying back shares. I think he was hoping I was going to give him a different answer. He didn't argue with the logic of it, but I think maybe I think he was hoping for a different answer.
It's interesting that you say that because Tim Cook, the current CEO of Apple, was here this weekend, and we got the chance to ask him about share buybacks too, because share buybacks have been such a big deal for Apple. They've deployed so much cash doing that, and just announced last week at the earnings that they'd be buying back an additional $75 billion worth of Apple shares, or at least they've authorized the repurchase of that much. Again, we sat down with Tim Cook this weekend, and here's what he had to say about that too. Listen in, Warren.
This is a funny story a bit. Is back in 2012, I'd been in the CEO spot maybe a year or so. We had a growing amount of cash. I think we had crossed the 100 billion kind of mark, if my memory is correct. And I was getting lots of input from a lot of different people, as you can guess. And when I don't have experience in something, I always make a list of the people that I think are the smartest people that I can contact to talk to them and get advice. And Warren was on the top of the list. As you can imagine, I'd never met Warren before. And so I get his number, I call out to Omaha, and I'm thinking, I wasn't sure he'd take the call. You know, I'm sort of calling out of the blue. He doesn't know me from Adam. And but he took the call, and I had a great conversation with him, and that was the first time that I'd met Warren, and he was very clear to me. I still remember he goes, let me just cut through it. If you believe your stock is undervalued, you should buy your stock. And I thought that was just the simplest way of looking at it. So here's what we do, is we first and foremost take care of our people, and we take care of the company and the future of the company. And we've been investing a ton in both this country and some others. We're going to spend $350 billion in the United States in building new sites, and we just announced a new expansion in Austin and so forth. So all of that is number one, right? And then if we have money left over, we look to see what else we do.
part of what else they do, he said, is to make acquisitions. And what I didn't realize is he said they're making an acquisition every week or two.
Yeah, they make a lot of small acquisitions.
He said they've made 20 to 30 acquisitions over the last 6 months, small acquisitions that they don't really talk about and don't tell people things about.
Yeah.
You knew that?
If you look at the 10Q, and you can see, but they make a lot of acquisitions. Yeah. And I hope Berkshire makes a lot of acquisitions, and I'd rather buy an attractive business than buy our own stock at its intrinsic business value. If our stock gets well below that, I've still got this strong, and I can do both, fortunately. But how an executive can say we're going to spend $10 billion buying stock and then not pay any attention to the price at which they buy it. They wouldn't buy any other business that way. And so we're price sensitive on it. On the other hand, when the price is right, there's no easier way to make money for your shareholders.
You say you like Apple buying back shares, so you think the price is right there.
Well, they've done a terrific job of it. They've done a terrific job. They've made their shareholders a lot wealthier because Tim has done that aggressively when the price was right.
How do you know in hindsight, how can you tell when a company's doing a bad job repurchasing? You have to be able to figure out how to value the business properly. It's easier than you're making it sound.
Yeah. The truth is, if you look back, and I was director of the company, but Coca-Cola kept repurchasing their shares at a time when it didn't make sense, if you look at it in the years earlier. They had a terrifically good idea of repurchasing when the company only had a market value of in less than 10 billion, and they bought a lot of stock and they were aggressive about it. But they fell in love with the idea, and I was a director at the time, but they're one of many. I mean, the same thing happened at Gillette to a degree. It's interesting. Sometimes it's difficult for CEOs to be objective about their own stock price, and they think the higher it sells, the better. And it's a fine way to feel, except if you're repurchasing it and you repurchase it at prices up to the sky.
When Coca-Cola was buying back shares and it turned out it was at too high of a price and you were a director, did you know that at the time?
I had a pretty good idea.
Why didn't you say something?
Well, I may have made some comments, but the management had done a sensational job. I mean, that's one of the reasons it got so high. They've done a terrific job. They made me a ton of money. If you belch too often at the dinner table, you don't get invited to parties anymore.
Which is the difficulty, I think, with probably any board.
You don't get to be a director if you're, unless maybe you're an activist or something, but people don't like it if you speak. And some CEOs like it a whole lot less than others. Some CEOs actually encourage a fair amount of dialogue, and others, make sure that all the important stuff comes up at 5 of 12 when you have to leave at 12 to catch your plane. And the next plane is 6 hours later.
That's interesting.
Boards are managed in different ways.
Have you known every board you've been on, which has been managed well and which is not?
Well, some are managed well in some respects, and they can be dumb financially. I mean, you have some managements that really have a money sense, and then you've got others that they're very good managers, but they're not good at. I always love it when I hear a management, and I ask the guy what he's doing with his own money, and he says, "Oh, I couldn't possibly, evaluate stocks and everything. I turn that over to somebody else," and then he goes out and makes it. $5 billion acquisition is something he doesn't really know anything about. We're just buying a whole lot of stock. Some are good at it, some aren't. That's true of our managers. We have terrific managers. Some of them are good at bolt-on acquisitions, and some of them would be terrible.
Do you let the ones who would be terrible at it go ahead and make a bolt-on acquisitions?
Not very often. Some of them don't have. They have great operational sense. They don't have a money sense exactly. You talk to a lot of managers, CEOs, and they don't want to run their own stock portfolio. Well, those are those are decisions, and those are capital allocation decisions, and they know a lot about businesses, and they know how to value things. You'd think they'd be good investors, but I had one fellow who was a big partner, and back when I was running a partnership a long, long time ago, and he had stock options at his places, and he would regularly exercise and take the money and buy Berkshire. Well, he actually wasn't so dumb, but it wasn't exactly what the options were supposed to incent.
But that's unique to have somebody who understands both operations and the money side of things.
Some really do, and
I'm thinking.
I would say Tim Cook, for example, does. He has a real grasp of. I mean, he has a operational mind, and he has a money mind as well.
What about Greg Abel and Ajit Jain?
I don't want to get going through the alphabet on this.
No, I ask it because Berkshire's in a unique position, and you have people who are doing all kinds of things. Some who are managing money, some who are managing operations.
Yeah.
Can somebody do all of that?
Both of those guys happen to have extreme money sides, but I don't want to get started going through the list.
Understood. Can't help but try.
Yeah, well, you got the answer for the two important ones.
Welcome back to Squawk Box. President Trump tweeting just minutes ago, the United States has been losing for many years, $600 to $800 billion a year on trade. With China, we lose $500 billion. Sorry, we're not going to be doing that anymore. Take a quick look at the futures. Continue to be down close to 500 points, 471.472. NASDAQ down 161. S&P down 50. I guess, Becky, if I were to pose a question to Warren, it would just be that those trade deficit numbers, you get bogged down in talking about whether they're good or bad or how to fix them. And it's a symptom of really it's a symptom more than a cause of what happens with China. I was just wondering, Warren, you've done great over the years with the status quo, with how the United States has approached China and China trade. Berkshire's done great. We've all done great. Everything's fine. Do you wish that Trump hadn't confronted China at all, and we just aren't addressing any of these long-term problems with intellectual property or, take your pick of which issue we're trying to solve, but you just wish he had left it alone and just let Berkshire do its business the way it's been doing, or do you think there's some rationale to confronting China?
China and the United States, for the next 100 years, I can tell you two facts about it. They'll be the two superpowers of the world, right, and we'll always have some tensions with them. And it can well be about intellectual property. It certainly has over the last 20 years or thereabouts, 30 years. And it will be about trade. It will be about policies that they're carrying out, in terms of their neighbors or we're doing. I mean, there's no way you can have two countries so dominant in the world without them having conflicts. You just don't, there are going to be tensions, there are going to be negotiations, and sometimes we'll both come away thinking we lost, but it's inevitable. So and how you play the game if you're negotiating with some people that are tough negotiators on the other side. I mean, it's not. Those are not easy decisions to make. I mean, if you're doing with the labor union, nobody really wants to strike. It's bad for both sides, but sometimes things develop to that point. So I think you should get very used to the fact that if you're a young person, that you're going to see a lot of different tensions over time. It will depend on the individuals involved. It will depend on the specifics of the situation. But every time we sit down, it won't be like a garden party.
Warren, you mentioned that there are going to be times where both sides walk away and feel like they lose. Are there times that both sides could walk away and feel like they win? Because that's usually the sign of a successful negotiation.
You want both sides to feel like they won at the end. And the idea of a negotiation is to take something that you have the other person needs and in a sense trade that for something that they have that you need, and it's going to be constant, and there's times when it's going to be tense. It's just the nature of things. I mean, you have that on a much different level when you're negotiating nuclear arms reductions or something of the sort. I mean, we know it's in the interest to get the nuclear stockpiles down and all of that, but that doesn't mean it's easy. And you try to come up with deals that are good for both sides, but that's not always easy.
I mean, I try and think about that in this scenario, and it may be particularly difficult in this scenario because for a long time we've been dealing with China as if they were still not a superpower, as if they were still. So we've been giving them better sides of deals. It's really hard to all of a sudden say we're taking some of that back. What do they get out of this deal when we are trying to change a negotiation that we think has been unfair to this point?
Well, it's difficult for us to accept the fact. It was difficult for us to accept the fact after World War II that the Soviet was a superpower in terms of military power, and there were, I mean, as you know, obviously, there are all kinds of tensions involved in that and negotiations, and it's still a worry that we have the two big nuclear stockpiles in the world, and you worry in terms of mistakes being made. I mean, it's a big game, and with China, it's overwhelmingly an economic game, and it's an economic game we didn't think we'd be in 40 or 50 years ago. I mean, the Chinese, the rise of their economy has been extraordinary, and they do some things we don't like in connection with that, and sometimes you have to get tough to make changes, and we do some things they don't like. But it's a reality now, and it's going to be a bigger reality as the years go by, and it's very easy for it to become a huge political issue. I mean, so you'll have people fanning the flames for their own interest in politics or their own interest in business, and it's not easy to navigate. But leadership that's the job of leadership, is to take on the tough problems.
Having said that, the economy has held up very well in the face of any tensions that we've seen to this point. Jobs report, incredibly strong on Friday. The last GDP report was very strong, too. So
you can't stop America. You can't stop China, though, either. But you can't stop America. I mean, we live as a country. You know, it's extraordinary what we have compared to 30 or 40 years ago. Even in agriculture, it makes it tough in agriculture because we get more productive all the time, and that tends to depress prices. But this country is going to move forward. I mean, there's no question about that. But China's going to move forward. And the way to try to do it is to do it that maximizes what both countries can do well, and more trade is better. But trade in specific industries can hurt specific industries here, and that's a huge problem. The heads of both countries have to be the educators in chief, and they have to explain why trade is good for the populace as a whole, and it can be terrible for people in certain industries. And then a rich country takes care of those people that become roadkill in the process of producing a better life for 330 million Americans.
Lots of people on Wall Street are not going to be as sanguine about this news today. I've been reading some reports last night. Goldman Sachs saying that this is not only rapidly increases the odds that we don't get a trade pact with China, but also increases the odds that you could see Trump announce that he's going to pull out of NAFTA, or that he's going to put auto tariffs on European imports. What do you think of that, and what would that mean?
It's the problem of escalation in anything. We have the problem of that with nuclear weapons. I mean, the escalation, and it gets more and more dangerous as people become feeling more and more threatened, and their own local political situation demands more and more action. I mean, that's the dynamic that you are facing anytime you get to these major problems between countries, and that requires the wisdom of the leaders, but to some extent it requires the wisdom of the people. I mean, and how the leaders convey it to people, and how they conduct themselves. But we will have this sort of thing happen. We've had it happen, obviously, and occasionally would turn into wars in the past. We can't do that anymore. In a nuclear world, you can't get to that point, and any sane person realizes it, but you don't want to get too close to that tinderbox.
USMCA, also better known as New NAFTA, that deal, is out there. But now I think Pelosi is saying that they're not going to bring it for a vote at this point. Are you in favor of the new NAFTA deal?
Well, I was in favor of the original one. We are very, very lucky to have Canada and Mexico bordering us. I mean, and then oceans on the other side. I mean, it's geographically, it's a very attractive position compared to how countries are situated around the world, and we've got lots and lots and lots of common interests, and we are the big guy in the game, and as the big guy in the game, we should do more than our share of making sure that our neighbors are growing and prospering at a rate that's consistent with ours. Doesn't mean they're equal, but when we live better, they live better. And trade with Mexico and Canada is enormously important. And we should treat them as neighbors and not adversaries.